Welcome to the StockMiner.com studios. I'm your stock miner, Brian Johnson. Welcome to the first trading day of the abbreviated week. It is Tuesday today. Did see a pullback in the markets, but I have to treat it as such. It is just a pullback to me at this point. If you are an Elliottician, I would say maybe we are looking at a 1, 2, 3 with an ABC little 4-wave here before potential 5-wave up. That's the way I would look at it as of today based on the action that we saw. We did pull back. We did get below the 20 and the 200 period moving average, which was curious. It was a surprise to see us actually break that by the time, and more importantly, close below that by the time the end of the day was over with. But I don't see anything necessarily all that ominous based on the action on today's action. If this was going to be some sort of a larger big wave down, I certainly would have expected to see a little bit more selling coming into the market, heavier than what we saw today. So let's treat it as a pullback and keep looking for maybe some new highs to be put in over the next few days. Now, moving ahead to the daily, look at this. We're going to be falling back into these moving averages if we go down a little bit further, which is very, very possible, really. To have just the 1 day here, we may see a little follow through and maybe a bounce off this. Could end up in some sort of a hammer candle or something by the end of tomorrow. If we do start to break hard below these areas here, maybe we need to rethink that pullback option. But as of right now, I do expect these to slow down or stop or hold the price if and when it gets back here, about 70 points down. So if we happen to get some sort of a move overnight or something in the morning that would gap us down, I would also watch for this area to be the place that it starts the day at. Watch this area here. We may also wander around. Today was kind of slow action. We might get more slow action tomorrow, which kind of bleeds its way down into this area as well. So be watching closely for that tomorrow. Breaks below these moving averages here would certainly make me a little bit more cautious on the long play. But any breaks back up and over 10,450, I think we could see some game on. I also, obviously, I like 10,500. We talked about that this weekend. That is the more conservative place to get long, for sure. So more aggressive above that 10,450 area, more conservative above 10,500. NASDAQ on a 60-minute, you can see that it was down today, almost 1%, but overall, bigger picture, just didn't really go anywhere. So we did have a little bit of a pullback here, and this is what I've got to look at it as, a pullback. A lot of other, while the Dow was breaking moving averages, the NASDAQ certainly was not, holding up pretty well today when it was all said and done. On the NDX, keeping in mind that these are the strongest. The NASDAQ, the NDX is the 100 strongest stocks in the NASDAQ, so you can see how it held up relatively well. Down 0.75% is certainly nothing to sneeze at, but just the price action of it wasn't all that great. Now, NASDAQ on a daily, you can also see the little candle that we put in here. And what did it do? It basically held below the 200. See, this is why I give this about a day for the bears or the bulls to kind of reclaim some of this territory. These are good places to see head fakes, and that's kind of what we saw on Friday. We did not know it, obviously, until we saw today's action, but of course we were on guard to see if the bears would try to reclaim this 200-day moving average, which obviously they did at the end of today. From a weekly perspective, it's only Monday. We're not going to, or Tuesday, sorry, I'm all mixed up. We're not going to worry about weeklies right now. SPX also falling back, breaking below and closing below one of the moving averages, but not breaking below the more major one down here. Didn't quite gap fill, got awful close. You could almost call that a gap fill. I'm not particular about to the penny type stuff when it comes to gap fills. It was awful close to a gap fill right down here. So if we're looking at this once again, this still looks like a 1, 2, maybe 3 finished up here with an A, B, and now working on a C type of correction. That would be my first guess, and that's my primary count, if you will, for you Elliotticians out there. For the rest of you and that are following me with the technical analysis, we're going to be watching closely this 1085 to 1088 area. I do have some pretty good resistance sitting down here right around that 1082 to 1085 area. Certainly be an area to watch if and when we get down into that, coinciding along with these moving averages. 1077 really being one of the moving averages, 1082 being the other. So I see some pretty good support down here in the 1082 mark. Be watching closely just to make sure that price action does at least close above these. If it wants to dip below it, watch closely to see if it closes below it. So that's what's more important to me. Will it hold it by the end of the day? Breaks back below this and even below 1070. Okay, now we maybe have something else we want to start looking at in the way of shorter term pressure on the markets. From a weekly, it's only Tuesday. Monday in most of our minds, but you can still see us working on a lot of these patterns here. What is it? It's basically chop. We could do this for a while too, guys. So we want to watch these lower levels. 1105 to the upside is one opportunity for a long play. 1130, another opportunity for a long play. And below 1040 for sure is an opportunity. Maybe below 1070 if you want to take a more speculative short. That's a good place to start looking at it. The VIX was up quite a bit today. You can see it was up almost 12%. So not a major move in the markets. Decent to say the least, just over 1% on everything. But the VIX was surprisingly Heidi today. As you see it run back up, it looks like it wants to come back up into this. So, continuing to watch these formations that we've had drawn in and see if any of them are actually valid in the longer term. From a weekly, we're going to get right back up here into the mix of things, but you can see that we gapped up to start the day and are already up. Obviously 12% for the week. We'll see where this candle ends up finishing though, which is the most important thing, where it closes. Apple on a 60 was down $1 today, but you can see really nowhere. I mean, and $1 isn't that far in Apple. It can do that in a couple minutes anymore. But you can see the little pullback here has to be treated as such. Just a pullback. Very, very weak action by the bulls and the bears today, to be quite honest. Ending up with a little, I'm just going to call this like an indecision candle in here. Really just barely got above the high, only to be pulled back. 260 being good, strong overhead resistance. 259.53 being the high. So this makes sense to me. Want to keep your eye on the 260 mark. And of course these moving averages below you, moving into the what is now the middle of the week. Apple on a weekly, not going to worry about it here. However, it is above the 20-week moving average. Let's see where that closes. FAS on a 60-minute had a fallout today, down $1.37 or 6.3%. So opportunities were here to play this down a little bit. Had to be a little cautious based on the market action. But once we got back below the 50, that was not a bad opportunity to get in for a 50-60 cent gain on FAS, whereas the FAZ started to run itself back up again, up and over this 14-ish area. And you take a look on the daily, what we have been kind of watching. This is all chop, needless to say. Still like you guys to not be swing trading this. That means I would not be holding these overnight. Play them intraday if you insist on playing them, regardless of what your accounts are like. If you are going to hold overnight, you better make sure that you hedge yourself just to be on the safe side. Coming back into the 1450 area, push above that, maybe brings us back into where? That $15-ish area that we've been watching over and over and over again the last few weeks. Watch this very closely. Overall, it's nothing but sideways chop. Same thing we're seeing in the market. So I would once again caution you into being an intraday trader of FAS and FAZ as opposed to swing trading them. Anything back below about $13.50, now you've got an opportunity maybe down into the $13 or below area to make a little bit of profits. Above $14.50, if you can get a break there tomorrow to the upside, I wouldn't see us. I wouldn't think that they're. Let me just. Back above the 1450 area here, I think we can reach that $15-ish area. That'll do it for today's video. Just looking at this as a pullback, giving you your levels, continuing to watch up here. And boy, to the short side, got to take small profits right in here. I have to treat this as just a pullback in the short term. So we'll watch to see if we get some sort of a reversal either tomorrow or possibly the next day back to the upside. And if we get some strong action there, we're going to definitely want to jump in, take advantage of some profits to the long side and see if it won't make this area or even possibly this area before it's all said and done with. And we'll be back with you again tomorrow night, talk more about the markets and set up a strategy for the following days. Bye.